So good afternoon, everyone. Hopefully you guys are having a good week so far, where we're going to be looking to trade and to have a few trades on live. In a sense, we'll be marking up those trades and presenting the high reward and low risk setup for everyone here present today with the sentiment Finlogix tool. For those who are not aware, don't panic. I'm going to explain you what it is in a few seconds. That's okay. But basically what we're going to be looking today are a few of those pairs, like Euro dollar, Aussie CAD, and then US dollar CAD, and the New Zealand USD. So the reason why I've picked those ones is because of the sentiment tool. When we get to the website, those are the top being traded at the moment. So we're always going to be looking to try to pick the best ones on the top. Okay, we will be looking to do that and not pick random trades in a sense. And for those who don't know, Sentiment Tool is powered by Finlogix, is a sister company from ACY Securities. So we use that to basically trade against the majority of the people into the market. I know it sounds silly, but statistically, I think everyone knows, and it's all everywhere. Majority of those people that try to be in the market, they ended up, in the first 3 months losing all the capital. So what about if we don't do what they do and we do the opposite? And if we can see what they're doing, we just do the opposite, right? So that's exactly what I've been developing to this strategy. That's the sentiment tool. Cool. So Finlogix is here. I'm going to send the link. I usually send the link for everyone. Sometimes, big pardon, I do forget. But that's, you can just remind me on the chat if I completely forget, but it probably won't happen. But anyway, so this is Finlogix, and the way to get into Finlogix is pretty simple. You just type finlogix.com, tap enter, and that's where you're going to get. From here, you can come to tools, and then you go into market sentiment. Okay. And just wait to load. It takes a little bit because it's a lot of data. Cool. Perfect. Here we are. I'm going to send that link into the chat as well for everyone. And I'm going to put here Finlogix sent. So it's on the chat. You can just click the link on the chat and you will get the you will get to this page. So essentially what we try to do here is we try to trade the majority, but we try to trade on the opposite way. Okay. Yeah, I know. It sounds confused, but it's really simple. So let's say we have, right here, these top ones, right? It says that we have 99% short, 99% short, 94% short, 77% short, 69% short, and 62% short. So basically what the market is doing at the moment is shorting those currencies. So it could be Euro dollar, Euro CHF, Aussie dollar, Euro Aussie, Pound Aussie, and Pound yen. What we want to do is we want to try to trade the major ones. So for instance, Aussie dollar, Euro dollar would be those bigger pairs. So so I've added this layer, let's say, of not complexity, but of, it's another layer of basically simplify what to look for. Okay, because sometimes when you're trading not major pairs, for instance, like GBP CAD, right? So, or maybe CAD Japanese yen, it's not a major pair. It's such a slow move that nothing happens so quick, and then you may get triggered into that tool, into the sentiment tool. Okay. So for this reason, I've noticed that it tends to work the best into the major pairs, like Euro dollar, Pound dollar, dollar yen, anything with the biggest pairs, the major pairs. So in this case, let's say we want to pick euro dollar, right? Because we have right here. There's there's 62% of those people on the market currently shorting the euro dollar. So what do we want to do? Do we want to short with those 62%? That's the majority. No, we don't want to do that. We want to actually long that. So what we're going to be doing is we're going to be trade the 38%. Cool. That's basically it. Right? That's literally basically it. Now, another thing that I've refined on the strategy, and the reason is, okay, I'm giving you the reasons. I'm not only telling you I've changed this, but for no reasons, just because I've changed it. No, I'm literally telling you. I've told you why I'm changing from trading all the pairs and sort of narrow down to the major ones, because most of the times the minor pairs and the exotic pairs, they move less rapidly, so they are less volatile. And in a sense, don't get me wrong, but I want volatility. I want momentum. I want the trade to go faster into my take profit. So I can reprice, I can recalibrate my entries, I can rewatch those trades quicker, okay? So when you're trading, for instance, like euro yen, it's such a, it doesn't move that quick like euro dollar, for instance. And it goes like down, it goes up, and then changes, and then sideways, and then it goes up, or then it goes down. So it takes a while to direct itself where it's going to go. Cool. That being said, the second point I've changed it is, if it is below 10%, we don't trade. Okay, we're not trading anymore, because what I found is last year it was working. In the last quarter, it was literally working into that sort of thinking that we had of if it's below 10%, we're looking to do what the minority is doing, and we're not looking to do what the majority what the majority is doing, not the minority. So in this year, after the second quarter, it looks like it's not working that properly anymore. So what we're going to do is we don't want to trade those minority pairs. Okay, so that's enough talking. Let's get to the high rate, high rewards, and low risk setups. I've separated a few today, and let's start with Euro Aussie. Okay, not Euro Aussie. Damn it, euro dollar. So euro dollar has a 38% only people longing it. Okay, so let me get into trading view, and let's go for euro dollar. Perfect. So on the 4 hours time frame, we can clearly see that it's starting to consolidate. Okay, it's starting to consolidate into the range of the high, like the all-time high of this year of 1.18. Let's call it 1.18300, down to the pullback of 1.16. Let's say 1.1620. Okay. 1.1620 to 1.918,300. So that's the range it's at the moment. It's really great, in my opinion, because we're looking to long. So what we're looking to do is we actually want those pullbacks to happen. Okay. And we can see that it's a very tiny pullback at the moment, and we could potentially see even more pullbacks around the areas of 1.16. Not saying it's going to happen, but we could. All right, there's a potential. If we jump down to the 1 hour time frame, we can clearly see that this is a very, very nice pullback. Now, few ways that we can use the entry point here. Okay, so there's the first way, which I think it's the most simple way. That is just Fibonacci. Right here. So the 38%, 50%, and 61% would be the preferable retracements. I can do 2 trades here already looking at these. All right, it's that simple. It's literally that simple. It doesn't even took me like 5 minutes to find this setup. I've looked at here into the sentiment tool. I've saw that euro dollar is a major pair. I saw that it's 38% only long, so the minority is long. So I will be looking to do what the minority is doing. So long. I've come to the chart. I've looked at the 4 hours. It's on a consolidation, sort of ranging, like pullbacking a little bit down. I've dropped down to the 1 hour, put the Fibonacci into the high and the low, or the low and the high, whatever you want to call it first. And I say that right now we're tracing back, we're pulling back into the 38.2, most likely coming to the 50 and maybe to the 61. Right here, I have 2 trade ideas already. I have a very risk setup that is basically entering at the market price, and I have a better risk setup and not that risky setup, better high reward and low risk setup that is less riskier. Okay, so the first setup would basically be entering at this level. Okay, it could either be where the market is at the moment or a little bit below at the 38 level of the Fibonacci. The second entry, and my favorite one, would be around this area of 50 and 61% of the Fibonacci. Okay, so that being said, if we look back, it actually lines up with a previous resistance and now support from the last leg and the last pullback. Usually the pullbacks have been around, let's see, 1.5. This has another pullback here. That one was 1.5. This one is 1.8. This one is a bit bigger. So from the last 3 pullbacks, we had 1 to maybe around 2% pullback median. So right here, a 2% would be very welcoming. Okay, it would be around the 61. So what are we going to do? So first thing is, I will get into one position here just to test the waters. This is a more of a high risk setup, but it's it's a riskier setup. It gives you a lot of reward, but it's it could potentially stop us, and my take profit, sorry, will be at the highs. So that gives me a 1 to 5. So that means that I have 100, pretty much 20 pips as a stop loss and 112 pips as a take profit. Okay, so 5 times, nearly 6 times bigger my stop loss. So that's the first trade. As I say, it's a very riskier setup, and it's not that well positioned into the market, but we're playing with the trend. So we're looking to long, and if we catch the bottom here, that's perfectly. Now, what is most likely going to happen is the market's going to come down to this area of 1.16 to 1.16200. And that's where I'm going to be looking to actually take my official position, okay? So let's say the market do something around this, and it pulls back around here and again goes up. So what I will be looking to do is I'm going to leave a pending order at this price of 1.62, sorry, there you go, 1.162. My stop losses will be just below this level of 1.158. So right now my stop loss is 1.15729, and then of course my take profit would be right at the highs. So it's a 1% less of it's around a little bit lower for the return, but it's still very, very decent return because we're only risking 47 pips to get back 210 pips. Okay, so that's really great. It's 4.47%. If you're risking 1% of a stop loss, you probably would get 4.47 gross, and then you have to calculate your swaps and fees and etc. Okay, so that would be the first setup. Now, One thing I haven't changed is look at these, if possible, every 1 hour. Okay, because it changed quite dramatically. If you come here tomorrow, that may be another number. And as I say, if you get caught, let's say you're trading on the long side of euro dollar, as we are now, and if you get caught below 10%, that's fine. It just, if your position is in profit, put your stop losses to break even and close like 90% of your profits, and let the rest run and see how that goes. So the reason is, if the market becomes to retrace, then you at least have some profit. You've banked some profits, some pips, and your stop loss at zero. Okay, so you won't be looking to have any problems with the risk because your stop loss at break even at zero. Okay. Now, if that becomes smaller number, so let's say 38 becomes 35, and then 30, and then 27, 20, and then 15, and 10, that's good. Most likely in a minute or so, it's like a bomb exploding up. All right. So the lower the number is, and like this is a perfect setup because we actually getting the pullback. So the lower this number will go, the biggest the position will the more momentum the position will have. Okay, cool. So that's the first trade, euro dollar long. Does anyone have any questions on that before we move to the next one? No questions? No? Okay, cool. Let's move on. The next one is AUDCAD. So AUDCAD, we have a sell. It's only 29%. So short, if we want to, if you want to trade, we would be looking to trade against the majority. The majority is 71% long. So what we want to do is we want to trade short. So let's go AUDCAD. Okay, there you go. Perfect. Again, what a nice trade, because it's literally sitting into, like, look, I'm not going to take even 5 minutes to find out the trade. Okay, so I've come to Finlogix. I've looked at AUDCAD. I've looked at the minority short, so I'm looking to short, and it's above, the minority is above 10%. Perfect. It tick all the boxes into Finlogix. Come to the chart, into the 4 hours chart. I can clearly see that it's in a sense consolidated. Okay, from here, let me just get this rectangle. So it's somewhat consolidated. We did try to break, the market couldn't sustain the break and came back into the inside of the consolidation. Now we are trading on the highs of the consolidation. Okay, because right here the lows, so we can see here are here are the lows. We can see here has another low, and then here we have another low and another low. Okay, and then on the top we have a few highs, and we are trading above the 50% of that consolidation. Okay, so that's great. It lines up with short positions. Now let's go to the 1 hour. So we had some sort of a little pullback from yesterday, Reserve Bank of Australia. So let me get the box. Oh, there you go. So right here we have a consolidation. Okay, we inside of that, and that lines up for me as a good trade. All right. What I would look to do is I would actually look to enter into market price for a short position. Somewhere here. The stop losses would be likely above these highs. I guess this is going to be a little bit of a bigger stop loss, but this is just the first position. And the take profit would be below on the lows. Okay, so right here. Cool. So that's one of the other setups into AUDCAD. Would be a stop loss of 61 pips and a take profit of 133 pips. So it's not bad. It's pretty much a 1 to 2. Of course, the euro dollar is still, the biggest position in terms of risk reward. But that's a pretty decent and reliable setup. Okay. Now, if you have a different entry criteria, if you have a different sense of looking at the chart or anything like that, feel free, okay? Because that's only what I've been developing. And I've also, if you go into ACY website, oops, sorry. There you go. If you go into acy.com, and then come into learn and then market analysis, go into my name, education, go into my name, Luca, and you can see here 4 Forex entry strategies that work. I've just did that last week, and I've sort of tell you from, top to bottom, what are my 4 entry techniques are. I have momentum breakout entry, I have Fibonacci retracement, that's the one I'm using today. I have moving average crossovers, and I have the ABC setup right here. Okay, I've used that quite a lot with everyone here today, actually on the webinar. So I'm going to send the link into the chat. My Forex strategy. Okay, send into the chat. Casey, I'm going to answer you in a second. Let me just finish this trade first. So yeah, that would be my trade for AUDCAD. Okay. Now, a few things to note is, have you guys seen that? Literally jumped. Okay, so that's the beauty of come here and check at least twice a day. That too gets updated every 15 minutes, but if possible, checks every 1 hour would be perfect. At minimum 2 times a day to 3 times a day. Okay, now AUDCAD haven't moved, still 29%. If we see that coming below and below and below, be prepared, because most likely we're going to be having a punch down pretty soon. If we break below these lows of 88,600, what I would be looking to do is place my stop losses to break even and close maybe 50 to 60% of the trade and let the rest run. Okay. Again, that's only my way to manage the risk. If you have a different way, that's completely up to your strategy, and you can use, of course, it just depends from individual to individual. Okay. Cool. Any questions on this trade? No questions? Okay. Now, KC74 said, do you actually take these trades? Of course, because if I'm telling you what I'm going to do, I have to put my mouth where what I'm doing, right? So I'm marking up here. Unfortunately, I can't show you actually placing trades because that's against law, let's say. But yes, I'm taking those trades. Okay, that's my strategy. I've developed that strategy by using it. I've optimized that strategy by, having a daily feedback from the strategy, looking at the chart, understanding if that works or not. Otherwise, I wouldn't be here, wasting everyone's time and, let's say, wasting my time as well. Cool. Now, next one is US dollar CAD. So US dollar CAD, that's an example I want to bring here. So US dollar CAD is below 9%. So I want to see if you guys learned, what should we do? Should we long it? Should we short it? What should we do? Send me on the comments. Let's see if short. Okay. Nakash says short. Okay, cool. Long or stay out. Short. Okay, that's a lot of answers. Okay, wow. Short, short, short. Long, long, stay out. Okay, cool. So what we need to do when it's below 10% is, below 10% into the minority, is we don't do anything. Okay. Remember at the beginning of the webinar, I've told everyone that yes, it was working last year, but this year seems like it's not. So I prefer to not touch it. Okay. If it's still working for you, and if you think that it still work, that's completely fine. It's completely fine because at least for my way of trading, a little bit more of a day trading to swing trading, I'm not looking to hold those positions, for a few seconds only, and I'm looking to hold for a few maybe hours or even days. So what I've noticed is that it was triggering stop losses too quick. Even if we're placed, based on ATR or anything like that. So in my opinion, what we should do is stay out. Okay, that's what I'm basically been doing. Now, if you look to do the opposite, then you could do the opposite. Okay, but I've just brought this example here to show to everyone and to showcase that I wouldn't be doing anything. Okay. Cool. The last one is New Zealand dollar against the US dollar. So NZDUSD, it's a strong sell and it's above 10% the minority. So it's 19 now. It could be 10% in a few hours or in a few days, but that's completely fine because we are already into the trade. So what we do is we manage the trade. If it's in profit, we close half of the trade, move the stop losses to break even, and let it run. Okay. If it's in losses, then we just close the trade where the loss is and assume the position, okay? Don't ever carry too bigger losses into your account because that bigger losses can accumulate pretty quickly and generate a snowball effect where your margin can be triggered and you can have a margin call, okay? So just take the risk, take the responsibility, and don't be like, oh, I have to be right. This trade have to go in my position. It doesn't, market really don't care what you think. It's just going to do what it's going to do. Okay. So we're trying to speculate here. And for this reason, we need to assume the risk as well. Cool. So for this position, New Zealand dollar against the US dollar is a strong sell. I have a position in EURUSD buy. Okay. Would it be right for me to take a New Zealand dollar short, New Zealand dollar against US dollar short? Not necessarily, okay, because I already have US dollar longs, already have US dollar shorts. So basically, when I'm shorting New Zealand against USD, I'm longing USD. So my net position on US dollar is 0. So of course, one of those two trades, Euro dollar long or New Zealand dollar short, will work out, okay? But not both of them, just so you guys know. So NZDUSD, let me delete that. Let's go to a 4-hour. Perfect. So NZDUSD is short. It's on 19%. Okay, just making sure you guys understand that if it becomes below 10 and you're in profits, close half, put stop loss in, break even. If you're in losses, just close the position. Now we close to this area of, let's say, of a support resistance-ish area, okay, because it was as a support and then becomes as a resistance and then now becomes as a support again. And we just, and we're just trading around this area of pretty much 0.60, all right, 0.6. Now, if you go to the 1 hour, we can see there's a barely of a consolidation, but still breakdown of 0.59886. So that I'm not saying, this will smash down, but most likely we will probably see a bit of a consolidation around this level until the market has something that will change the character of the structure, okay? But it's a very high reward setup because the lows we got are down here. So if we go in to target those lows, we're probably going to get something to around 1 to 5. Okay, so we're risking 10 pips to get 50 pips. Okay, something around that. So my best take here would basically wait for a little bit of more pullback, because maybe buyers can be interested in this area, thinking that the market would probably go up, and look to trade the short positions into here, where my stop losses would be above this high here, and my take profits will be down at the lows. So that is basically, around these highs, above these highs here. So that is basically 30 pip stop losses to 138 pip take profit. So wait for the market pullback at around 61.86, and then we can have a trade, short trade. That's a very short stop loss. So that's not of a bigger, in a sense, not of a bigger position that would go for ages and ages. You will either get out quick, or we will either be in profits for maybe a few days and drive the market from there. Sorry, just drinking some water here. Cool. Does anybody have any questions around this trade? No questions? Okay, so let's go again, and I'm going to show all the trades we've took today. So we've took EUR/dollar longs. EUR/dollar longs. So we have one riskier position and one sort of a swing trading position. Okay, more of a lower risk, lower reward, but lower risk as well. As of this one is a more high risk and high reward setup, because the stop losses are shorter. Okay, it's thinner in a sense. So the chances of us getting stopped out on this position is pretty high, but if we get right, it's pretty good as well. Now, what I think it can happen is the market come back to this box. As I always say, the market tries to always pull back on those boxes. Okay, I even have a YouTube video on that. Actually, I'm gonna find and send into the Telegram. And what I think it can happen is then the market pulls back around 1.16200, and then we get into that trade and we move up to 1.18300. Okay, that's the main target, basically the all-time highs for the year. What I'm expecting it actually on EUR/dollar is much higher than that. It's 1.20 by year end, but we may have this pullback to 116, and then a continuation up to 1.20. So that's a pretty good trade in a sense. Then we have AUDCAD short. Okay, so we have AUDCAD short into here. I actually can give two options to this trade. You can get one trade right here, and the other trade would be around this area high, but it's not of a bigger difference. And of course, gives you an extra, probably would give you an extra 20 to 25 pips. But it's literally, it's too small, in my opinion, because when you look at EUR/dollar, you're actually spreading out. Okay, it's a bigger difference. It's not like a 20 pip sort of difference. That's like 100 pips difference. Okay, it's 1,000 points. It's a big of a move. But like here, it's too small. I wouldn't bother to do that. But it's completely up to you if you prefer to, and that's fine as well. Then I've put it up the example here as of US dollar CAD to don't trade, okay? Because the reason is it's below the 10%. When it's below the 10%, we stay out and we wait for the tool for the sentiment tool to price out again, okay? Just wait. As I always say, and I've been saying that for quite a while actually, market will be here tomorrow, next week, next month, next year, and the next decade, the next century. It's always going to be here. Okay, so plenty of opportunities. And I think everyone that is here, it's around my age, you know, around 25 to 30 years old. And that's, you know, we have such a big life to live. So just go have a walk, chill, and then come back to the charts and have a look at what's going on. Okay. Cool. Still below 9. And then the last trade was New Zealand dollar. So New Zealand dollar against the US dollar short, but this one is a pending order. That's a pretty good setup as well. It's a 29 pips, well, let's say 30 pips is stop losses to 138 to 140 pips take profit. So that's pretty good. And what we're looking to here is we're looking to basically market retraces and the buyers sort of get activated into here and then sellers to push down, because we know that the market is majority long. So we want to get this pullback up, and then market continues to only 19% short. So market goes down. Okay, cool. I think that's it for today. I could cover all the topics. Now it's up to you guys to ask me questions. If you have any questions, please feel free to send me over.